I put out a tweet a few weeks ago about thinking that the market would bottom, and some of the things that I mentioned seem to be happening. Rates coming in a little bit, and then the polls are changing. And I didn't want to convey that I was plugging any Republican or I mean any specific party. I've learned long ago, I've been around long enough that I know that you get a new president in, and you can get all excited about his policies and really be happy about that president and that Congress, and they're in for 4 years, and then they're swept out of office, and someone comes in and reverses all of those policies, and it just kind of goes back and forth. And so I'm not plugging the Republicans. I'm just saying, look at this chart, and this is what I was thinking. When you get a split Congress, look at the performance of the market. Now, as you go from the left, you can see the performance of when a Democrat president is in power. Market actually does well, better than the Republicans, up 7.8%. When the Senate is all Republican, when the Senate goes Republican, you can see 11.9% is the gain during those years, 6.3 for the Democrats. And then the House, you can see when the Republicans are in power in the House, then it actually does better when Democrats are in. Now, as David check marked and split. When you have a split Congress, if the House goes Republican and the Congress and the Senate stays Democratic, look at the performance. It's so when you get a split Congress, and that's what I was thinking about. Maybe, this changes, and you have actually a much better performance during a split Congress. And then even when you have a split president, if the president, let's say the president stays Democratic, but the Congress moves over Republican, the market actually does really pretty well during those circumstances. Now, look what happens when both parties control the whole system, the Senate, the Congress, and the presidency. When Democrats are in control, you have some of the worst performance. When Republicans are really in control, then you have just a tiny bit better, but not much. But this is what I was thinking could happen, and that would be favorable for the market. So I'm not plugging anybody. I'm just saying if this happens, this is what we could have positive outcomes for the market. Now if you go to the stock performance after the midterms, before the midterms on that other slide that I've got, this shows you what happens. And I think I've even read that the market has never been down 12 months later after the midterms. And David, if you could go and highlight down at the bottom to the right, these are all the different presidents that were in office, and then what happened, when the Congress, I guess, switched. But it's really down. I wanted to show this. What has happened since midterms? Now, since the midterms, from November 1st to April 30th, 6 months, the market is up on an average of 15%. Over 12 months, it's up 16%, and even in 3 months, it's up an average of 7.3%. So this is what happens after midterm elections. The market lots of times comes into the midterm on a down note, and you can see we're down this year going into midterms. But this is one other thing that could help the market going forward. And records can always be broken, but it's just something. These are some of the things that you should be aware of and be looking out for in the future. And that's why I tweeted that. That's why I've mentioned that over the last 3 or 4 weeks. Hey, look what's coming. Look what might be more positive for this market going forward when everybody was very, very negative. So those are some of the stats that you should be aware of and thinking about as you're making some of your investment decisions.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.